Hello folks, welcome to Pro Trader Strategies Market Commentary for Friday, May the 7th. It's Unenjoyment Friday and I'm Eric Wilkinson. Yeah, some of you may recognize me as the Wolfman from mainstream media, where I talk about the economic data and the geopolitical environments, how that comes in to impact the markets with some of my market analysis. I'm going to do the same thing for you folks in these daily market commentaries, but I'm also going to talk about my option strategies I'm implementing into my portfolio based on those assumptions I come up with in my market analysis. For you folks, I've streamlined the process for you to find the optimal option strategy for any given assumption. We look at the pricing, and that is ultimately what is going to determine our strategy for that given assumption. Finally, if you take anything away from this video, please smash that like button. It really does help out. And if you have any questions, comments, or anything else, throw it down there at the bottom. I'll be happy to go back and forth with you, make sure you are clear of concept. All right, so without further ado, economic data across the pond. We got German industrial production coming in better than expected at 2.5%. German trade balance came in a little bit lower than expected at 14 billion, expected to be 22 billion. French industrial production waned a little bit, coming in at 0.8%, expected to be 2.1%, and a revision to last month's number down, just albeit slightly by 0.1%. And then moving over here to the United States, because who cares about Italian retail sales? Well, we got actually one other thing. We got we got Great Britain's construction PMI coming in right in line with expectations at 62. Now we'll move over here to the United States because we got our unenjoyment numbers, which is the non-farm payroll, probably the most important economic data point of the year, released on the first Friday of every month, basically. So here's something to talk about. The non-farm payroll change coming in at 266,000 hires, expected to be 990,000 hires, almost a million hires. We got 250-ish, right? Is really, to put it into perspective, a quarter of what we were expecting. Last month's number, remember we were thinking we were going to get to a point where we were looking at a million hires? Well, they revised that 900,000 down to 770,000. It was actually closer to 150,000 revision down. So that headline number missing massively. The revisions were horrible, and the unemployment rate upticks to 6.1% from 5.8%. Something to note though, our average hourly earnings coming in hotter than expected at 0.7%, expected to be unchanged. Now, that's showing wage inflation, right? The person that is working is showing average hourly earnings is increasing. Well, we're seeing on the flip side of this, unemployment rates going higher, help signs out everywhere. People are struggling to hire workers. Why? Because of the unemployment benefits. That extra $300 is making it to a point where people are making more money on unemployment than they were on or with a real job. The other flip side of this is the stimulus checks. That kept people from working as well. The average hourly earnings is ramping up because those people that are actually working are working a lot of hours and getting the overtime, driving that number higher. So the average hourly earnings seems good on the front line number because it seems like the worker wages are going higher, but it's really skewed to the fact that the worker that is actually working is getting overtime, and that's skewing the numbers here, folks. So a lot of people are already talking about getting rid of the extra $300 on unemployment, and probably not going to be any stimulus, because all of this stuff is a moral hazard. When you're paying people more to not work than to work, that causes a problem, people. All right? I think we're starting to figure that out. All right, wholesale inventories slightly lower than expected at 1.3%. All right, crude oil is continuing to come off after the last couple of days. We saw a drawdown this week, pretty massive, and we saw some demand going into the manufacturing sector for the distillates there. That is a little bit of a conundrum with the crude oil coming off. Now, it's not surprising that we're seeing the rest of the equities move higher today, because it's looking like they are not going to be able to raise rates. You cannot raise rates when there is no employment going on, all right? We're going to be seeing some inflation here. They're talking about it being transitory. It could really jack up, folks, and they are going to raise rates. So this morning on those data points for the unemployment number, we got a spike in the bonds, meaning that interest rates were going lower. It's kind of reversed now, obviously. You can see that on this chart here, and making it look like a very toppy pattern here. Today, or this morning, it was looking like we were making the right move, but today it's starting to come back off. Gold, we talked about this. If you jumped on board when it got above our Fibonacci, or not even a Fibonacci, our support level here, lining up with 1780, I told you that as soon as it gets above that, settlement above that, it was going to be a race to 1800. Well, we ripped through that, and today are continuing that march to the upside. Now, if we settle down here closer to 1800, 1820, right around there is going to make it look like it's topping out a little bit here. But I do think that the inflation worries are going to be the thing that really drives gold higher. Bitcoin is moving higher here today by about 1,000 points. Yesterday we saw the sell-off, but it did get a little bit of a bounce. Late in the day, we started hearing some government officials talking about Bitcoin. And why were they talking about Bitcoin? Because the massive amounts of electricity that we have to use in order to drive the servers, or these little machines, the mining operations, to produce a Bitcoin. It is really sucking on the energy grid, folks. And now all of a sudden, all of these people that were backing Bitcoin for the longest time, thinking it was the greatest thing since sliced bread, happen to be the people that are very environmentally conscious. Now that they've made their millions, I guess, all of a sudden they're hating on Bitcoin. So the thing here is, how are the government officials going to start regulating the amount of energy that it takes to produce a Bitcoin? So that was a big topic of the discussion, and I think it's going to only gain more and more traction here, okay? Because I was talking about this about a couple of years ago, how much electricity these mining operations were using, and I was surprised that the people that were actually doing the mining are probably the ones that are in the same camp as the environmentalists, which just doesn't make a whole lot of sense. All right, well, finally, we've got the NASDAQ, actually yesterday in the afternoon, the NASDAQ strong into the close as the rest of the equities were as well. Today, making that move to the upside because it probably looks like the Fed is not going to do anything anytime soon. So I think that the fear of higher interest rates being put on the shelf is making the equities charge to the upside, new all-time highs, as you can see here in the Dow Jones Industrial Average, just slightly off of that at this point, but E-mini S&P is making a new all-time high as well. All of these highs made during the day session. But market, I don't think, is going to slow down heading into the weekend here. I don't think we're going to see a massive correction here. WYNN, you guys remember I screwed up on this thinking it was an earnings trade, and happened to get into this a little bit early as the earnings come out on Monday. And when I was looking at Yahoo Finance, I think it was Yahoo Finance for their earnings, it gave me WYNN, so I jumped on it late in the day, but was able to cover it. So I went into the May weeklies that expire today based on an earnings trade that never happened, and sold the May 122 puts in there for 52 cents. I bought them back this morning for 9 cents on the open. So a nice little win on WYNN with a mistake, but I'll be happy to do that any time of the day. Having a nice winning trade there for that. And then I decided to get involved with a little LULU. We got this swing trade set up. We bounced off of the 50-day simple moving average, rolled back over right back down to the point of control where the 50-day simple moving average is lining up. Well, we came down, touched that, and bounced up and away from it, repelled. That is a very strong bullish sign. Today coming in, confirmation of that bottom candlestick. That, you can't write this up any better than that. And as you can see, we have pretty high implied volatility. I looked at it, it's right around just slightly shy of 50, which is my kind of, over, under. Above 50, I usually like to sell options. Below 50, I like to collect or pay for options. Well, this was right up there in and around a 50 percentile. So relatively expensive premiums, especially with no earnings and only a few days to go. So I decided to get involved in those options that are going to expire in 2 weeks. So those are the May monthlies that expire in 14 days, and sold the 320 puts in there for $3.30. Now, a lot of these aspects of this trade don't necessarily follow along specifically with my guidelines to trading a short put. 45 days to expiration is usually my wheelhouse for this. Thing is, here with this one, I was able to get pretty good strike location in and around that area of the point of control. I would not mind necessarily picking up the LULU. So 320 puts me down there at that point of control. That's where the market has found as value for LULU. So that's a good strike location for me as far as I'm concerned. And I only have a couple of weeks to really have to worry about that. A nice little pop up to those highs that we saw just about a week ago. That would probably allow me to get out of this trade relatively quickly. So that's what I'm looking for in this trade. Sold the Lululemon puts based on a bullish assumption because I have high implied volatility. We can see the volatility is already starting to come out of this. And I haven't really had this market move from when I put it on. And it's already, because of this volatility coming out since the putting this on, it's turned it into a winning trade already. And that's what we usually see. We see the market move higher, volatility coming out, which is another reason why I lean towards selling those short puts. And that's all I've got for you guys. I hope everybody has a great weekend. Again, like I said, if you enjoyed this video or you took anything away from it, please smash that like button for me. It helps us out. And questions, comments, throw them down there at the bottom. I will make sure you are clear of concept. Finally, what is the thing that you really look for in a swing trade setup that I might be missing, other people might be able to benefit from? Throw it down there as well, and I'll go back and forth with you on that. All right, so smash that or take that. All right, or take it easy. Take care.